All right, so today I want to show you what consistent trading looks like. And I'm going to break that down here in today's trade review. Now, today wasn't about a big win. It was about executing flawlessly. And this is something that I've been working on personally behind the scenes as I've kind of not been uploading or posting anywhere. But it's been a big theme that I've been focusing on personally, and it's really helped me out in my trading. My win rate has bumped up from about a 45% win rate to about a 75% win rate this month. So massive difference here. Um, so the idea here is that it's not about the perfect conditions. It's just about perfect adherence. And what do I mean adherence? Adherence to, in my opinion, our rules or our operating procedure. In other words, what are we looking for and what are we supposed to do within a trade? Now, I've personally predefined all that, and I'll show it to you here before we break down today's trade review. But here's my standard operating procedure, and it makes this really easy on me. Trading is so much about emotion and psychology. The less we can have to make decisions in real time, the better. And there's one point in particular I want to go over in here, but first I'll just briefly, overview. Basically, the trade needs to have a higher time frame alignment. It needs to have a certain key level. It needs to be at a certain time. It needs to have certain lower time frame model confirmations. And if all four of those are met, I'm allowed to engage with the trade. And here is my risk management protocol. Now, for example, I want to highlight in this risk management protocol, this was one of the things that really helped me out because I noticed sometimes I would get into a trade, and the moment I would get into the trade, I would keep analyzing the charts and I would find a reason to back out, to go break even early or do something. And one of the big mindset shifts that I've had recently is the moment I enter a trade, I stop analyzing the candlesticks and go straight to trade management. And that basically looks like these ones. So I place the stop loss, I'm in the trade. I TP1 at 1R approximately, or a swing in the structure, whichever is closer. I don't do anything else. I just place my TP, my partial TP. And then once that's hit, I go break even. Simple as that. And then from there, I just sit and watch it. I don't touch it for the most part. I let it hit TP2 at 2.5R approximately, or a swing in the structure. And the exception is I trail the stop loss if, let's say, the trade is dragging on and it's starting to consolidate and build liquidity against me, then I'll trail my stop loss. Now, what happens then is I'm not creating micro variances in my trading system. What that means is here is the exact protocol that I do when I enter the trade, and I'm not messing with it. I'm not, as if you've had the experience of you go break even too early and it taps you out at break even, and then the trade runs without you. And then maybe you do something stupid after that because you're like, oh man, I should have been in that trade, but I got scared and I got tapped out. And now I'm down 1R because I took a loss after that. This has been an absolute game changer for me, is just systematizing everything I'm doing, especially after I enter the trade. But it's also true before I enter the trade. Um, and I guess we can talk about that here in a minute. I want to do a breakdown here on the trading setup for today, and then maybe we'll come back into this real quick. So let me get my screen over here ready. Oh, I got to switch it. Boom. So we're on the daily time frame, and obviously we're bearish. We got these daily candlesticks just grinding down. We have, tapped into a significant higher time frame level, this daily inversion fair value gap. But I'm eyeballing this line right down in here. Here's a pair of equal lows on the higher time frame. We do have a C2 candle, so this bullish candle closed above the closing price of this previous day's candle, so that's a little bit bullish. But I don't trust C2 candles that are against the order flow. Nonetheless, paying attention to that, we see that we're above the equilibrium of this previous day's candle. So that gives me kind of a mixed bias on the higher time frame. Not implying it's not the greatest conditions. Doesn't mean I might not find setup, but we'll see. Now, if we go to the 4-hour chart, we can see it's still just bearish order flow. SIBIs, sell side imbalances, are rejecting price. And even if we look at this, we closed over this 4-hour inversion on NQ here, MNQ, by the way, but we didn't create a market structure shift. So overall, I'm still leaning on the bearish side here. And then on the 1 hour, we have this massive BISI, this fair value gap that was at the time, so this is the 9 a.m. candle. The price was currently up into the zone. We have this fair value gap hadn't even been rebalanced too. Now, ultimately, my draw on liquidity was seeing this whole 4-hour fair value gap getting rebalanced today, probably, and seeing the possible. I wouldn't expect it to expand to the lows today, but I was expecting to see this gap get balanced out. Now, so that kind of set me up for a bit of a bearish bias on the day. We go to the on the medium time frames. We go to the 15-minute. We have some things going on here. I know it's a little messy. Let me break it down. Overnight, we can see Asia expanded 22 handles, and then Asia expanded. London took the low and high, which meant we might have seek and destroy conditions. And if we look, London expanded 313 handles, or excuse me, this is not handles. This is I forget what this uses, but it's not handles. We can see London expanded 313 handles, so we're down 300, up 300, kind of making me feel like we were going to have London high of the day just based off of this structure here. We tapped into the 130 ADR in London, so okay, I'm thinking, probably London high of the day. Now, these circles are noting certain things. The ADR was hit, the 130 ADR, but here we are at, we're looking at 9:30 a.m. We have a new day opening gap above, which is a little bit bullish. We had an opening range gap above, which was bullish. And we can see that opening range gap here is broken into quadrants, the 50% level being right there. And we were at midnight. So in my head, I was imagining if we think about the formation of a candlestick, this was an open, high, and I'm imagining a low and a close somewhere. So I'm thinking bearish on the day. However, when I go down to the lower time frames, let's see here, switch over back to this screen. I was seeing all this liquidity that we had. Here's the 9:30 open was this blue line right here. And then this is 12 a.m. midnight. So I saw we took London lows. We had all this liquidity down in here, up in here. And so I was potentially looking for, I could go either way today. I was like, I could go for a potential long, potentially up into this zone up in here. Maybe it taps up into here and then go, and then I could also look for a short coming down. And we can see the 9:30 open. It opened on the 1 minute chart here. It opened and created this inversion fair value gap. I wasn't too stoked about it. I didn't like the lack of impulsiveness in this candle. I didn't like the size of this gap. I didn't like the equal lows below. So I let this play go without me, even though it was like, I think that's kind of what I expected to some extent. For me, a long would have been much better if it just dumped out of open, came down to this level here, and then went up for that for further delivery towards sell side. Now, what ended up happening is the other option that I saw we had, and I'll just pull up the trade, I guess. Let's do that. And then I'm going to circle back to where I started a little earlier because I have something I think that might be really helpful. So here's the setup that I took. It was on the 2-minute chart. Basically, we traded up into this 15-minute fair value gap, which is what I was seeing if we're bearish, and we're going to continue down to the consequent encroachment of that 1-hour fair value gap that I showed you on the chart. Where is settings? More settings. There it is. So here we can see I took this 2-minute short, all the trade criteria, 2-minute inversion fair value gap. It had a liquidity sweep. It had SMT. It was order flow aligned, time matched. We had some equal lows sitting down below. I don't have that marked up on this right here, but these are the equal lows that we were looking at. And I took this reduced risk on my funded account because I had taken a few weeks off of trading my funded and was just trading an eval to get back into the groove of things, making some changes to my system, specifically partialing earlier. And so I took this on my funded account, 50% risk, and then I also copy traded it to an eval that I'm working on. So little bit had some emotions regarding that, kind of like for whatever reason it was, stacking the accounts. Felt like I was risking more when, maybe I was, maybe I really wasn't. But despite that, what I want to hammer in here is the process. This trade I had my doubts on, but I still entered it. Met all of my criteria. It matched with what I was looking for, so I entered the trade. I followed my procedure. I followed my protocol. And even in getting into the trade, I had a little bit of doubts when it came to this 2-minute short. But nonetheless, I adhered to my process. I didn't interfere with the trade. That is the big thing that I really want to talk about. I didn't interfere with the trade. I just let the trade play out. I partialed when I was supposed to partial. And I don't know if we zoom into the 1 minute, maybe we can see it a little bit better. Yeah. I partialed here at 1R on this candlestick. I went to break even, and then I let it ride out until my 2.5R target. And what I want to share here is that, let me hide this real quick. The trader who wins, okay. Is an amateur trader, you're inside the emotion and you are the emotion and you act erratically. And when you're more of a professional trader, and this is kind of where I'm bridging onto, I'm not going to claim myself to be a professional trader. I'm reminding myself that this is what a professional trader is. They observe the emotion, right? You see the emotion, but you follow the plan. And the idea here is that one controls you and the other you control, because it's not like we're not going to experience emotions. I've even heard traders like Jade Cap who've been doing this 10 to 15 years. They talk about how they still experience the emotions. For me, I'm 2.5 years into this journey. I still experience emotions, maybe 50% of the time or more. But what we have to do is we have to adhere to our plan. And that has to be predefined criteria. And once you have that predefined criteria, it makes it much, much easier to do this right here. Because otherwise you're just guessing inside the trade if you don't fully know when you take profit, when you break even, if you do, if you don't break even. And this is all decisions that are backed by the data. And I've, have hundreds and hundreds and hundreds of this model specifically and trade setups and trade data from live and backtesting that I'm able to rely on to be able to create my criteria for what I'm looking for and how I manage my trades. My data tells me this is exactly what I need to do to squeeze the most out of my trades in this market. So I hope that's helpful. Or I can show you, the results for the trade. Here we are. I don't really care. I'm not trying to make my P&L the focus of my videos at all. It's more just me documenting my journey and my process. And more than anything, what I really want to highlight are statistics up in here. The trade win rate for this month is 75%, profit factor of 4.1, and the trade expectancy is all positive. The day win rate, these are all really solid looking stats. And this has been because of patience, discipline, and the identity shift that I'm talking about here, what consistent trading looks like. It's not perfect conditions, it's adherence to my rule set. And that takes time to define. And you're going to have to figure that out for yourself. But I'm just finding that the more I adhere to my protocol, the easier trading becomes and the better the results seem to be. So hope that's helpful. It's kind of a mixture, obviously, of a little bit of there was the kind of the psychology that I saw behind today's trade setup, and more important than the trade setup, in my opinion, because you could have taken this a bunch of different ways. You could have taken a 1 minute market structure shift, or you could have taken a 30-second IFVG, like right in here. You could have done a lot of different things. It's not necessarily the model. It's more so what I'm talking about what consistent trading looks like. And I've come to understand that consistent trading, it looks like being consistent. And it requires self-reflection, because we have to be able to reflect back onto our day and determine what was our criteria for entering, for managing the trade. Did we follow it? And if there was no criteria, then we need to make it, because otherwise we're just kind of winging it and guessing. So I'm going to hope that helps someone more so than just a trade review and look at my P&L. I kind of wanted to review some of the thought process behind today and what I saw. And yeah, I'll cut it there.